Good morning, people. Let's see here. Hope you're all doing well. It's the start of the week. It's Monday. A little delay here, but Monday, September 15th, I want to break down what it is that we can expect from the market movement because it's a big week coming ahead with the Federal Reserve rate decision. And that's probably the first thing that I do want to talk about. If you just type in FOMC or Fed Watch Futures tool, like something along those lines, you'll get to this page from the CME Group, and you'll see that we have our expectations for the rate decisions coming right up. So as we approach this date, the meeting does technically start tomorrow, but we're going to get our rate decision and everything that we want to know from Jerome Powell and the Fed with a new dot plot September 17th, which is this Wednesday, where a lot of people have been dubbing this the peak in the market, and we're just going to see sell side from there on out. We'll see how that shapes up, but right now, we have a 96% chance of a singular cut, a 25 basis point cut, with about a 3.7% chance of a double cut, meaning a 50 basis point cut. Question is that being priced in already? Is this upside movement into all-time highs pricing in all of that and that factor of this rate decision? So what do we need to know about that, and how can we get ready for the week ahead? So first and foremost, right, we can quote-unquote say that this 25 basis point rate cut is priced in. That's generally an expectation. Now, if we do get that 50 basis point cut, which is a much smaller chance, this weekend it was floating about 7%. We would shock the market. There's most likely going to be some upside pressure from that. The biggest factor that we want to see is the new Fed dot plot that reveals the 2025 plus outlook. Obviously, there's not really much time left into 2025, but they're going to give us a better understanding of what is going on with the internal Fed expectations, because there were some dissenters, right? Last time around, we saw that there were a handful, I think two Fed chairs that did, or I guess governors, I should say, Fed governors that wanted to see lower rates at those current meetings, but things didn't go as planned because the majority said we're going to keep things as is. Now, if Powell... What should we think about this? So if Powell hints at a one and done type Fed rate cut, so if he hints and there's expectations that he's probably leading towards this is probably going to be the final cut for at least this year or the most immediate future, we could stall out and fade this all-time high momentum movement. We also have to keep in mind that inflation is still sticky over in September as well as August, which could create more of a tech/growth stall and sell-off. If 10-year yields rise and they stop losing that steam, that momentum, we're going to start to see that equities do lose steam. The bottom line, a 25 basis point cut is baked in. Without hints of easing, we could see buy the rumor and sell the news, which means thin air into all-time highs and faster reversals into the end of the week. Not only that, but this week we have the triple witching. So we have what's it called? We have options and equities that expire on Friday. A lot of people are asking about rollover. Today, I'm going to keep the current futures contracts on the S&P 500 and the NASDAQ as is, meaning still trading the U contract, September contract, which actually expires this Friday, September 19th. And then we're going to have to roll over to the Z contract for December. So this is the expiration. The triple witching is the expiration of stocks plus stock options, index options, and futures, which happens 4 times a year. Quarterly brings big volume and sharp swings, forcing a rebalance in the markets. And this time it hits 2 days after the Fed, meaning that positioning can flip volatile. So there could be some kind of pressure that comes out from these all-time highs if the market doesn't see what it wants to see coming from the Fed, suggesting we could be topping out for a little bit this week. Those are my thoughts. Now, Monday and Tuesday, we have probably slower, choppier movement, failed moves, failed breakouts, because a lot of people are eagerly anticipating the Fed as well as the rollover into throughout the whole week, pretty much. People are going to be rolling over today, tomorrow, Wednesday, Thursday, Friday especially. So, dovish cut, right, that could squeeze higher. We want to be cautious about the one and done, which could fade risk into the end of the week. Thursday to Friday, dealer hedging plus triple witch flows equals chop and volatility. So don't be super shocked if the first half going into Wednesday, even some parts of Wednesday have some kind of bullish momentum / choppiness, and then we flip hard into Thursday and Friday. One of the final pieces of information before we take a look at these futures is what happened to Tesla. So Tesla is up drastically this morning on a pretty fat repurchase, right? I'm just trying to move the chart over here. This is what you can see out of Tesla. We're up. I think we hit like 430 pre-market, in and around that area, if I'm not mistaken. Up about 8% pre-market. There's a major distribution top around 440. I could see that as a major target to the upside before things start to kind of shelve off. But a major insider move put Tesla in the spotlight after Elon disclosed a purchase of more than $1 billion worth of company shares. An SEC filing showed that that Musk bought 2.568732 million shares on September 12th at prices ranging from $371.38 to $396.54 per share. The total cost of the purchase was $999.96 million. So he now owns about 509 million total Tesla shares. Obviously, I didn't say this exact number, but we can see that we rallied about 7% on Friday with another about 8% pre-market today. So this is one of the big drivers in the Mag 7. A lot of the other Mag 7s have been holding out kind of weak. We'll see how that takes, but right now we have all-time highs on both NASDAQ and the S&P. But what does this mean for the market? So let me just move this area actually slightly, because we've got a few things to consider now. So on Friday, what we saw from NASDAQ was a break into the all-time highs finally, where we saw a lot of, oh my god, come on. Where we saw a lot of buying that took place on NASDAQ from around 24,070 to 0.75. Oh, this is a pain in my butt. So we got the all-time high break, and then where you can see this thinning of volume here on the weekly chart, the thin volume on the Friday daily chart, as well as this 200-day volume drop-off just above that 24,070 area, 0.75. There was a lot of buying that came in from that area to project markets into new highs, and that held out for the majority of the day on Friday. As you can see, these pullbacks into the afternoon got absorption right in and around 0.75 before we made those highs. Pre-market, just around that area, we get absorption yet again. We make a new all-time high in and around 24,180. What does this mean for the market? Now, since volume and volatility is probably going to be a bit lower and choppier throughout the first few days, going into the rollover week and the Fed, we can see a lot of absorption into these highs. Now, I wouldn't call the market out of question for new all-time highs. We could see presses higher, but I'd be very cautious about these continued breakouts and trend moves. If we start to see a failure under 24,150, 160 area, what happens is NASDAQ would mean revert back down into 24,070, 0.75, where there's going to be a lot of desperation from the buy side. 24,050 is going to be a lot of desperation for the buy side. So if I want to see bullish momentum today, if I want to see that upside move today, I want to see this NASDAQ starting a bid from pretty much the open, right? I don't want to see it too far under 24,150 and just start trending higher. Don't let these guys get trapped into the highs and start propelling more upside momentum on heavy buy side to have those shallow pullbacks for a trend day. Anything that doesn't converge with that, meaning we start selling under 24,150, 155, you're most likely going to see a mean reversion, a larger drop to the downside, which could be to the tune of 100 plus points on the NASDAQ. So with that being said, I hope I've given you enough information to start the week off. We'll take a look at what's going on throughout the days for this week, especially around the Fed and the triple witch. So I hope everyone has a fantastic Monday, has a fantastic week. We'll see you guys in our next update next week, and we'll figure out some time to do an afternoon session, as this Wednesday we'll be taking a look at the FOMC with the team at TradePro Academy. So make sure you check us out. You can get the first month 50% off with the code ROOM, first month 50. I'll see you guys there. Enjoy and take care.